Good morning and welcome to IG's early morning call on Monday, the 4th of March. I'm Angela Barnes. Coming up on today's programme. Well, in equity markets, Japan's Nikkei 225 has hit the 40,000 level for the first time, lifted by tech stocks. And the dollar is under scrutiny as two major central banks will decide on interest rates this week. The market is also awaiting February's non-farm payrolls jobs data. And in commodities, OPEC Plus producers have extended voluntary crude output cuts to the second quarter. So we'll be taking a look at oil prices. Well, firstly, let's take a look at volatility this morning and see how the VIX chart is looking. Well, it's currently up on the day, up 0.27%. And you can see since the 13th of February, volatility has been lower, suggesting a more subdued outlook over the next 30 days as well after the tech rally, and stocks closed February on a positive note. And with 30 minutes to go until the European markets open, this is how the pre-market is looking across Europe. The FTSE 100 is set for a lower open, currently down 0.25%. France's CAC 40 is also set for a lower open, currently down marginally there, 0.08%. And Germany's DAX is also set for a flat open there today as well, just up marginally 0.02%. Well, Europe as well, European markets on Friday, they've been reflecting Wall Street's bullishness. Europe markets have been showing significant strength. The Euro Stoxx 50 soaring to a new all-time high as well last week, even as concerns about the EU economy mount. The DAX also pushed to an all-time high as well, above 17,250. Traders will now be closely watching the ECB rate decision this week, with the bank expected to keep the main refinancing rate unchanged. We'll have more on that in a moment. But let's have a look at what the picture was like overnight in Asia Pacific markets. Well, the Nikkei 225, as noted, they crossed the 40,000 mark this morning, setting a new record high. And you can see up 0.50%. That comes after just being short of reaching the 40,000 level on Friday. And as noted, that was buoyed by tech stocks tracking gains in the US. The Hang Seng, meanwhile, down 0.42%. And the S&P ASX 200 in Australia lower 0.13%. Well, as I said about the Nikkei 225, let's just pull up the price chart for you and have a look, because it reflects a significant shift in investor sentiment and highlights Japan's growing influence in the growing market. Modest inflation rates, a weakening yen, which has boosted export profitability, and significant advancements in corporate governance have made Japanese stocks more attractive to foreign investors. Additionally, the optimism as well surrounding artificial intelligence and its integration into various sectors has played a crucial role, particularly benefiting chip-related stocks and thereby contributing as well to the Nikkei's historic rise that we've seen this morning, as I said, smashing through that 40,000 level. Well, this week, market participants will be focused on China's trade balance and inflation data for February, and the two sessions meeting today. And Australia's latest GDP data is also this week, and that will be on the radar as well of investors. And let's have a look at how Wall Street closed on Friday. Well, the Dow Jones Industrial Average, S&P 500 and the Nasdaq all ending the week higher again. Another winning week, which resulted, as you can see, in more gains. The S&P 500 up 0.80%, the Dow Jones up 0.23%, and the tech-heavy Nasdaq Composite up 1.14% as well. The S&P rose, setting another all-time high. It's been on a bullish run and it's climbed in 16 out of the last 18 sessions as inflation's cooled. The Dow Jones also gained, as seen there. Technology stocks led the market, with the Nasdaq jumping to after surpassing its prior record set in 2021. And then let's have a look at how things are looking early trade as well in the US. Let's have a look. The US 500 S&P is set for a lower open this morning, currently down 0.06%. The Nasdaq, meanwhile, is set to open up 0.13%, and the Dow Jones is set to open in the red, down 0.15%. Well, this week traders will be keeping across testimony by Fed Chair Jerome Powell, who's set to deliver his annual monetary policy testimony to the House and Senate beginning on Wednesday. Investors will be listening very closely on updates in the state of the US economy, the fight against inflation, and when central banks may begin cutting interest rates. The February jobs report, updates on economic activity, and job openings, as I said, also on the schedule. More on that in a moment. But let's move on to other news. In China, the National People's Congress will begin on Tuesday, where Chinese Premier Li Qiang will lay out economic targets for this year. Pressure is mounting on China leaders as the country is facing a property crisis, deepening deflation, and a stock market rout. Well, like last year, Li Qiang is expected to set a growth target of around 5% for 2024 to keep China on a path towards President Xi Jinping's goal of roughly doubling the economy by 2035. Well, last year's 5.2% growth rate was likely much flattered by a comparison with a COVID hit 2022, and there won't be much base effect in 2024. The 5% target will be a lot more difficult to achieve. The market is also awaiting more measures to support the country's property market. Last month, the People's Bank of China announced its biggest ever cut to a key mortgage reference rate. And this comes as data from this morning from ANC Research shows that China's unsold residential property pile-up surpassed 3 billion square meters by year-end 2023, estimating 3.5 years roughly to digest the inventory. And ANC also noted in its report this morning as a result that home prices will be under sustained downward pressure. In other news as well this week, investors will be watching the Bank of Canada's interest rate decision on Wednesday and the European Central Bank interest rate decision that follows on Thursday. Well, last week, ECB President Lagarde suggested that disinflation would persist and emphasised the need for more evidence before price increases can return to the ECB's 2% target, inflation target. Well, the bank is expected to keep its main refinancing rate unchanged at 4.5%. Deposit facility rate and marginal lending rate are also forecast to stay unchanged at 4% and 4.75% respectively. Recent inflation data last week showed inflation fell in major European economies, France, Germany, and Spain, while the Eurozone's preliminary inflation data for February dropped to 2.6% from 3.8% the previous month. Canada, meanwhile, is widely expected to keep its rate unchanged at 5% this week. It comes after inflation there fell 2.9% in January. The Bank of Canada has paused rising rates at its last 4 meetings. And let's have a quick look at the euro US dollar price chart first of all. It staged a rebound on Friday and closed the week with small gains. The pair looking fairly calm this morning at around 108.46 this morning, currently up slightly 0.06%. And then if we just move over to the US dollar, Canadian dollar ahead of this week's BOC meeting, well, the technical overnight was leaning in favour of buyers for the time being, and it's currently up on the day 0.03%, although the price has been advancing. As you can see, upside momentum, however, has been slowing. Well, the dollar will also be tested this week as well, with the release of a set of job-related data in the US. First, on Wednesday, ADP employment change. US private businesses are forecast to have hired 150,000 workers in February after 107,000 job creations in January. Also on Wednesday, JOLTS job openings. The number of job openings is thought to have dropped to 8.895 million in January, 131,000 fewer than in December. And obviously on Friday as well, non-farm payrolls. Early expectations are for 200,000 job creations. Remember, last month, the US economy added 353,000 jobs in January after an upwardly revised, 333,000 in December, and way above market forecast of 180,000. And if we just pull up the US dollar basket this morning, take a look at how the US dollar is doing against its peers, currently down 0.02% this morning. Investors, as said, there will be watching Chair Jerome Powell's congressional testimony and all this US jobs data, which could offer fresh cues about the Fed's rate cut path and in turn influence the US dollar. Well, on Wednesday, Chancellor Jeremy Hunt will outline his spring budget. And here's what we know so far. Well, on the 6th of March, Hunt will deliver his tax and spending plans for the UK, what is likely to be the biggest fiscal announcement before the next general election. Well, the budget comes not only against a backdrop of stifling tax burdens, but also staggering public debt, placing the Treasury in a politically sticky position. Well, according to the Institute for Fiscal Studies, tax revenues as a share of national income in the UK are currently on track to hit 37.7% in 2028 to 2029, the highest level since World War II. To alleviate this load, Hunt has been publicly planning for what he calls smart tax cuts. However, the IMF has warned Hunt against tax cuts, saying that fiscal consolidation is needed to support growth and public investment. Well, some believe Hunt will implement a further 1p cut to national insurance, which would cost the government around £5 billion, whilst others have touted the idea of a 1p cut on the basic rate of income tax. Analysts have also predicted a cut to inheritance tax or stamp duty, a fee applied to the sale of property or land over a certain price. Of course, according to the Times, Hunt is similarly considering placing an extra levy on vaping products. That would help to line Treasury workers with making vapes less accessible. Meanwhile, let's have a look at commodities and see how oil prices are doing this morning. Firstly, let's take a look at Brent. It's currently up on the day, 0.18%, trading around $83 a barrel. And if we just move over to US crude, well, that's also up slightly on the day, 0.07%, trading under $80 a barrel there at 79. So OPEC, this comes as OPEC Plus members agreed on Sunday to extend voluntary oil output cuts of 2.2 million barrels per day in the second quarter. Saudi Arabia said it would extend its voluntary cuts of 1 million barrels per day, leaving its output at around 9 million barrels per day. Last week, two OPEC Plus sources told Reuters that these cuts could be extended until the end of the year. But would that be enough to support prices? Well, the IEA expects oil supply to grow to a record high of about 103.8 million barrels per day this year, almost entirely driven by producers outside OPEC Plus. Well, last Friday, Baker Hughes weekly survey, that showed an increase of total rig counts to 629 last week from 626 the previous week. The number of oil rigs in operation, meanwhile, rose by 3 to 506, the most since September last year. Now, let's have a quick look at gold and see how that is performing this morning. Well, that's currently up on the day 0.14%, trading above the $2,000 level. It's been oscillating in a narrow range during the early session, consolidating last week's strong gains. On Friday, though, you can see it jumped up to just 2,081, and that's its highest level since the end of December. And the US dollar, of course, let's just move back to the US dollar chart, because as well, it continues to be undermined, as earlier noted. And that disappointing release of the US ISM survey on Friday as well, playing into that, which showed that manufacturing sector activity contracted more than anticipated in February. Also, the less hawkish remarks by several Fed officials have reinforced bets the US central bank will start cutting rates at its June policy meetings, and this seen as a tailwind for the yellow metal as well. And then let's just have a quick look as well at copper before before we go, let's have a look at the price for that this morning. Currently up 0.26% at the moment. And that's as weak manufacturing data from top consumer China continues to weigh on demand for the base metal. China's manufacturing sector accounts for a large portion of metals demand. A softer US dollar has lent some support to base metals as it makes the greenback priced metals cheaper, of course, to holders of other currencies. And that is all we've got time for this morning on Early Morning Call. Thank you very much for watching. Do keep across all our social media platforms for market analysis and updates throughout the day.